Hey guys, and welcome back to another episode of Breaking the Cycle, Finding Financial Freedom. This is episode 7, uh, pre Father's Day shenanigans. We're just going to have a shorter episode today. I am joined by my co host, Endless Grind. Unfortunately, Beardy
Hello.
had a very important meeting to get to today. He's not going to be able to join us. With Larry Fink coming out with the ETF for Bitcoin, he decided that he was going to go up there and personally speak to him and kind of figure out what their plans are. So he'll
Mm.
hopefully have something to report back to us on that. But I was very impressed. He got a face to face meeting with Larry.
Yeah. I hope that he brings back some good information for us
Yes, definitely.
and puts in a good word for the Bitcoin space here.
Yes. Well, if anyone's going to do it, it's going to be Beardy. You already know that. So,
Of course.
all right, buddy. So you ready to hop into it?
Yeah.
All right. So, what do you make of the CPI read this month? And would you be surprised if it did not continue next month?
Hmm. Yeah. So I just pulled this up here just so we have like a chart to look at. This what's important for people to realize is that we are most of the time they're just talking about CPI, but there's also core CPI, and so on this chart here, the solid blue line is the CPI numbers that you typically hear reported in the news, and that like dashed lighter blue line is the core CPI. And the reason why I have this up is because it is important to kind of like recognize that while regular CPI is coming down quickly, core CPI, which is less food and energy. So you basically take the food inflationary aspects and the energy aspects out of it. Um, that has been a little bit stickier and is yeah, as you can see there, it's not sloping down as quickly. It still looks like it's in a downtrend, but it could be kind of evening off and, maybe it starts spiking or something like that. So I do think that that is something that we have to pay attention to, even though it does look like the regular CPI is like plummeting and has a very steep downtrend. The core CPI is a little flatter. And I would like to see that come down more before I think that the Fed is going to uh, actually like remain paused and or pivot. And that was the other thing that happened this week with the Fed meeting is this is actually the first time that they've paused since introducing rate hikes, which is awesome. So at the beginning of the year they went from the 75-point base hikes to the 25-point base hikes, and this is the first time that they've paused. But Jerome Powell did say in that meeting that they're potentially planning to have 1 to 2 more hikes by the end of the year, and I imagine that those would just be 25 point basis hikes. But
Now, let me interrupt you
mm,
just real
yeah,
quick.
yeah.
Why do you think that they would skip this month instead of just doing the 20 and 25 basis point this month and then maybe pausing next month and then coming out and saying, like we are potentially going to pause. We may have further rate hikes. We're going to evaluate this month and see how the market reacts, as opposed to coming out and saying we're pausing now, but we're going to do it again later.
Yeah, so that's a good question. My response to that is going to be a little tinfoil hatty conspiracy theory type of
Oh, well,
thing.
you know that I'm the black sheep of the group. So if everyone doesn't know that I am like I we won't go into the details of what gets said in the pre-chat, but sometimes Beardy is like, I don't think that's true, man. I don't think Martians really are coming to Earth to eat whatever. So
He keeps you grounded. Yeah, so remember, so like I look at it from the my psychological background, and I know that there is a lot of psychological games that are being played in capitalistic societies, individualistic societies. And so when I look at when I think about that question, I don't really think that they're going to do it. I don't think that they're going to actually raise it, 1 or 2 more. They might if like nothing else breaks between now and the end of the year. But I think that this is just another example of job owning. Like, because remember, like, the Fed can only destroy demand. They can't actually change supply.
Yeah,
So
absolutely.
if they're looking at these numbers and they're like, "Oh my god, we still need to like go up higher. Like we need to like get this inflation under control and it's all our fault because we told people that inflation was transitory and that we weren't going to raise rates and then we decided to raise rates at like the fastest rate in decades and blah 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 blah." Like they screwed this up, and that's the whole reason why in March when you saw banks starting to fall, these banks were failing because of treasury bills that they were getting forced to sell that hadn't been released, or hadn't made it to maturity yet. And that's all because the Fed over the past like couple of years have been telegraphing a completely different move than what they were actually going to do. So when you do that to somebody, you have a risk manager who's trying to like manage risk and figure out, like how like what percentage of our portfolio needs to be in this and that, and they make all these decisions based on what is being telegraphed to them, and they gave them the completely wrong information. So that's why you started to see some of these banks failing, and basically when you're doing that, uh, you're recognizing that it's probably eventually going to lead to more problems. So they want to keep raising the rates because they know that they have to kind of bring this under control, but they also know that they can't keep raising the rates because they've already broken the system and we haven't felt the full effects of all these 75-point rate hikes, because it takes about 12 to 18 months for all of these hikes to affect the system. And I believe they didn't start doing the 75-point basis hikes until May of last year. So we're only a couple of months into this, uh, and we haven't felt the full effect. So, with all of that in mind, if all they can do is control demand and they're scared to keep raising the rate, they have to make it look like they're going to do that to scare people to destroy demand. So they don't, the Fed is never going to come out and say, you know what, everything's great. And like, we're going to slowly start bringing it, or we're going to quickly start bringing it back to zero because inflation is defeated. And like, we made it through, guys. Thanks, everybody. You did great. We're going to have another bull run now. They're never going to come out and say that, because if they did, they start to perpetuate the problem that they're trying to bring down in the first place. So I think he's saying that because the market knows what direction we're going in because they have to, but they can't say that because then more and more people will start spending money and that will lead to uh, more problems. So that's kind of like my tinfoil hat response. I don't really foresee them doing it. If they do, it's because nothing has actually broken yet. But the second that we start seeing these banks break again, which I do anticipate in Q3, Q4, we will probably see some more of these banks failing. That's going to be the point where they're going to say, "All right, yeah, we're done. We're done like raising rates. We're just going to continue to pause."
Yeah, I think it's already broken. I mean, there's that video that James did the other day on the best answers, and he was talking about what was that new Fed fund? It's that Fed emergency fund for banks, and they're keeping this not it's not a secret, but it's like very hush hush and labeled something else, and they're
Mhm.
still artificially pumping trillions of dollars into the market.
Oh yeah, yeah, exactly. And
So, I
that's
mean, the market's already broken. The banks are already broken.
mhm.
The banks are already insolvent. I think that I agree with you that I don't think they're actually going to do it unless JP is just like YOLO. I'm going to totally just tank this, and I'm going to show them. I don't think he's going to do two. He may do one. I
Right,
think there's
right.
probably a 25 to I'll say 25% chance he does another one, right?
Mhm.
Um, I think there's almost no chance he does the second. And I think there's at least a 70, probably 50-50 actually. 50-50 chance that he does or doesn't next month. If he does, he's only doing one because of how much money they're having to pump into the market. He's just doing it, like you said, the jawbone to flex for the market to show them that he still has the power. And he wants everyone to think that he does have this quote unquote deep tool chest and war chest that they have of tools at their disposal. They don't have any tools. You know
Right.
what they have? Market destruction. That's it.
Mhm. Yeah.
Literally it. They don't control the price of oil and oil. They don't control the price of energy at all.
Mhm.
There's nothing that they can do other than scare people and kill market demand. That's it.
Exactly.
So
Exactly.
I think that's what he's doing. He's just trying to flex. I think he's like the old guy at the bar that everyone used to know was a scrapper and now is like 55, 60, and out of shape with a beer belly, but his reputation of being a
Mhm.
brawler is the one only thing that's keeping him from getting, like whooped on because he's so out of shape and doesn't he couldn't even run, like 50 feet without passing out. But no
Right.
one wants to mess with the guy that he was. I think the Fed used to have a bunch of tools, but they've just gone so far down the down the drain that they can't do anything. They just can't.
Right. Right. Yeah, no, and yeah, so that's I mean that's basically how I see it is it's just they're trying to continue to have some of that demand destruction psychologically. They're trying to keep people on their toes, not give them that full confidence to say like come in and start pretending that we're in QE again. But like you mentioned with that government program that they put that program in place because of what they saw happening in March, and this is a different form of QE. This is a form of QE that they can do behind the scenes. So the mainstream media is not talking about it, but if you look at the charts, like you said, more and more loans are being taken through that program. And so that's more and more money effectively coming into the system just in a backdoor type of way. So it's QE without QE, is essentially how I understand it. And I pulled up this tweet that Joe Consorti put out a day or two ago. Um, and it just also kind of shows like this is the continued quote unquote like run on the banks right now. Deposits at US banks fell by another 75.3 billion this week, the largest drop since the March bank runs. And this is a huge headwind for credit creation, and we live in a credit based global economy. Get the picture? The world runs on debt, and we're pulling the money out of the banks. So if they can't loan that out and create more debt, the system starts to fall apart. So this is what I'm watching. This is what I'm weary of. Something is going to break. Everything is good until something breaks. And what are they going to do when they have to tell the public that, oh, another shoe dropped and that program that we introduced in March that we told you was going to save everything and you don't need to worry about it, that's not doing enough. How many, how many times are they going to be fooled? A lot because the public loves to be fooled. But eventually enough people are going to get the picture, enough panic's going to happen that they're going to have to come out and say like, all right, we're going to start cutting rates, and we'll go from there.
You know what's crazy to me that not that everyone doesn't realize?
Hmm.
Bitcoin fixes this.
I know, right?
Fucking wild, right?
Yeah. Oh, and then so that was the original chart that we were looking at with the CPI at 4% and the core CPI at 5.3, not coming down as quickly. And
Mhm.
then I just pulled this up too. This is the Trueflation uh, statistics, which I believe Trueflation uses like integration with like Chainlink to be able to like pull the data to be able to like gather this stuff in real
Yeah,
time, which is
they
pretty
do
cool.
it's a whole bunch of real cool stuff that they do with that.
Yeah. And it says that right now inflation in the US is 2.41%. So,
Well, that's not far off. I mean, and well, we know that JP will never actually use that, right? Because
Right.
it doesn't fit his narrative. But I'm sure he would love to be able to just pull that up and be like, see, we're almost there. We're good. Guys, trust me. We're good. Don't worry about it.
Right.
I got this.
Right.
But he's created such a, oh, God, I feel bad for the UK.
I know. Yeah, that's the UK. I mean, obviously it was much higher and it is coming down, but there's still a lot more elevated than us. And, you know, if you think about it, the UK is like kind of lucky compared to a lot of other places in the world, because a lot of other places in the world are even higher than this because they rely even more on like the global economy, and the US pushes inflation off to these other countries, and
Yeah.
we lower our inflation by essentially raising their inflation by the way that we operate with our money and all that stuff. So yeah,
Venezuela.
this is
Yeah.
right, exactly.
We
So yeah.
definitely did not have a hand in the CIA. Definitely did not have a hand in running that country. No, sir.
I don't know enough about that, but
Yeah. Anyways, so yeah, the UK, and then who was the EU? I think just also announced they were raising rates as well, right?
hmm yeah, yeah,
Yeah.
yeah. I think that was a day or two ago that they said that they were still raising and that they weren't looking to pause or cut anytime soon. And it makes sense looking at that data.
Do you think we're going to get a cut in 2023, or you think it's going to be 2024 at least?
2024.
Probably. I think that's what I
Yeah.
think too. I think
The
that
the yeah, the only way we would get a cut earlier than that would be if like
big break,
big break. Things got really bad.
like Wells Fargo or Chase, was in danger.
I don't know like specifically what might cause a big enough break for that, but it would be something that would, we'd definitely be in a recession. Like everybody would be talking about, recession would be like headline news for them
Yeah.
and to, come out and say, "All right, we're going to do something to address it.
I think
Calm
they
down."
may do something late Q4, like going into January, maybe, or like ending beginning. Well, I guess that would be the very beginning of Q4. So,
Hmm.
yeah, or Q1 rather, of 2024. So I think I think it's going to be something either really late Q4 or something maybe later Q1 of 2024. But
Yeah.
I don't know. Got anything else on this one, buddy?
No, I'm good with that one.
All right. Excuse me, folks. So we all know BlackRock owns the world, right? Do you think Gary will be told to let them start their ETF? And by virtue, pardon me, grayscale. And then I want to pull up, or go ahead, of yours here, and then we'll pull up something.
Yeah, sure. So yeah, I just wanted to highlight this aspect of this article on the BlackRock. Uh, let's see, BlackRock may have found a way to get the SEC approval for a spot Bitcoin ETF, and that's the big thing about this news, is that this is a spot ETF that they applied for. And this part that I have highlighted on the screen here, on page 36 of the NASDAQ, where the proposed ETF will be listed, it states that to mitigate against market manipulation, NASDAQ will be brought in to enter into a surveillance sharing agreement with the operator of a spot trading platform for Bitcoin. And the reason why that's important is because not uh, so number one, they're addressing the biggest issue that the SEC often talks about, which is their concerns about market manipulation related to Bitcoin prices with ETFs. So they're specifically pointing out the very thing that the SEC has always said, like, this is our concern and why we're not approving stuff. And they're, I believe, one of like the if not the first, one of the first to offer this SSA agreement, the surveillance sharing agreement for the Bitcoin ETF. So where my brain's going with this is that BlackRock is the, biggest manager of funds in the world. They have these connections very deeply ingrained with a lot of like big key players, especially in government. the SEC can look at this and say, we're going to give permission to BlackRock because we have to, quote unquote. But we're going to say that it's different because BlackRock was willing to address our concerns with market manipulation, and they were willing to have a surveillance, whereas the other people weren't. So that's what they're going to lean on, I think, to say, like, well, this that we approved this one and we never approved any other one before this because these guys get it and they're doing it differently in this way and they're addressing what we asked for. But what they're also not saying is that we never really told the other people what they need to do to get it approved, and
Mhm.
and I do, again, I'll put the tinfoil hat on a little bit here. Psychologically, if traditional finance is realizing now that crypto's here to stay, Bitcoin's here to stay, it's not going anywhere, the old world, or the old regime of traditional finance is going to slowly kind of start dying from this point over the next few decades or whatnot, and transition into this, they want to have their piece of the pie. So I do think that part of this is kind of like all planned in the sense of like, all right, we got to get on board. We were dragging our feet for so long, and we didn't think that it was actually anything. Now we understand that it is something. We can't tell the public that. We have to try to like squash this as much as possible, make the prices as cheap as possible. We'll start layering in at the bottom, and then after we have all the position that we want, that's when we'll start telling the public, okay, yeah, like now there's on ramps and this is safe and you can do this and Bitcoin's okay and maybe Ethereum's okay and blah blah blah. So they want to allocate their positions first before they tell us that it's okay, to go with that. So I think that's the narrative that's starting to be set up here with this, if that makes sense.
Yeah. Yeah. I would agree with almost everything you said. I think that there is a chance that I'm actually going to show the tweet from the chairman, the finance chair,
Yeah.
real quick. Let's see. I want video. Uh, can
You're breaking up there a little bit, Joe.
you hear me now?
There we go. Yep.
All right. Some reason my computer's acting weird. Hold on.
Mm-hmm.
So
There
your
we go.
move, Gary. So this is Patrick McHenry. He is the 10th district for North Carolina congressional district and chairman for the finance chair or finance board. So he's kind of important, kind of
Yeah.
guy got some say, just a little bit. And he tweeted this to Gary 2 days ago. The SEC must not pick winners and losers based on inconsistent factors. I'll be watching this carefully or closely. And it's the BlackRock, filing for the ETF. Now, I know everyone has said in the past that, like they're concerned, or the SEC has said, hey, we're concerned about market manipulation of prices and stuff. But BlackRock has been manipulating market prices of gold for decades. Like it's been a thing that's been proven, I think, right? Or is it some of the larger hedge funds I know have and have been fined for it?
Yeah, I know JP Morgan has.
Yeah. So okay. Yeah, it's probably Morgan. BlackRock, don't sue me, please. Like I thought it was you guys, but it was another big company. But yeah. So I think was it the judge in the Grayscale trial or Grayscale with the SEC came out and said, like, what proof do you have that the market is being manipulated? It's just what the SEC is saying, right? Like they have no
Right.
proof that it's actually happening or they're going to be able to do it. So I think what they did was someone told uh, Gary to tell them what you be able to he wanted to see to be able to pass it, right? Like someone gave him the cheat code, right? Like they got the
Hmm.
answers to that. So I think that they're gonna have to start. I think they're going to obviously approve BlackRock because they got told to, but I think they're also going to have to approve at that point Grayscale for sure because I mean they've been doing it longer, and if Grayscale says okay, fine, then we'll do the exact same thing, then what excuse do they have not to allow Grayscale at that point? But I think,
Exactly.
like you said earlier, Grayscale is going to come out and say, "Why couldn't you have told us this 8 months ago?"
Right.
Like why couldn't you have told us this when we came to file, with you, when you told us we were not allowed to, like we've been asking you for this clarity. You guys just keep saying neener, 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 figure it out. I know you don't.
Right.
How is that helping the market? It's not, which is why there's such a trending torrent of hashtag fire Gary, which everyone should definitely retweet, by the way.
Mm.
Um, so that's kind of my final thought or my thoughts on that.
Yeah, me
I guess,
too.
yeah. Well, I guess we're gonna move on to our last kind of question, and we're gonna do a shorter episode today, folks, because it's just the two of us, and everyone's got Father's Day plans and stuff like that. So we want to make sure that everyone can get out and do stuff with their families. So,
Yeah.
any final random thoughts thoughts on things you noticed this week, or wanted to talk to the audience about?
I didn't have anything specifically that I'm not going to go over in the charts that I have here.
Okay, cool.
All right,
You want to go
awesome.
ahead and
So
run
we'll
through
just
that chart real quick?
yeah, we'll we won't go into as many assets as we did last time, but we'll just look at some of the key ones here. So starting off with Bitcoin, the levels that we want to kind of keep an eye on this week are the same as last week. So last Saturday when we did this slash Sunday, Bitcoin was right at the bottom of the bull market support band. And we said, like, we want to at least hold the bottom of the bull market support band for the weekly close, and we would prefer to get back above the 200-week SMA. So we did get our bare minimum. We did hold the bottom of the bull market support band, but we didn't get the top, and we didn't reclaim the 200-week SMA. So this week, it's essentially the same thing. We had that scare this week where we actually finally dropped underneath the bull market support band after holding it for about 3 days. But then we came right back up above this short-term trend line that I have here. Um, and sometimes people ask me like how I draw these trend lines because they don't always like connect everything. If I see like a trend that has more data points on it than sticking with just like the top of the trend, I'll draw it that way. And if you look carefully, this trend has more data points than if I was to, let's say, take it from the top here and go this way. And how do I justify like this not being inside the trend? You have a 1 day fake out, and then it came back into trend. Okay, so these 1 day fake outs here and there, sometimes when I draw my trend lines, that's why I justify them that way. I'm basically saying this is a push that they tried, and you can understand why they tried, right? So just as like a quick little TA lesson here, the price dropped down to the 50-week SMA, I'm sorry, the 50-day SMA, which is this teal blue line. It held it. It came back up to the horizontal resistance slash trend line by getting over the 20-day SMA, which is the orange line. It held that for a while, came back down, tested the 50-day SMA, came back up, got back above it, held the 20-day SMA. So here is basically the point where the bulls were like, okay, we held the 50-day, we reclaimed the 20-day, we lost it, but then we held the 50-day again. let's try to see how much further can we go. Can we actually break this horizontal resistance? So that's why they came up to it. That's why it came out of trend. But then it was just a fake out and it came back in. So I thought I would kind of share that as a little bit of like an educational lesson there. Um, but anyways, back to what's been going on this week. We dropped below the trend and then we came back into it. And yesterday, with probably the help of the strong stock market, we were actually able to get back above the bull market support band, but we are just underneath the 20-week SMA. Saturdays are typically not the greatest days for the greatest action, but uh, as of right now, we're up and we're holding the bull market support band. We're above the 200-week SMA again, but it looks like we're being rejected at the 20-day SMA. So tomorrow is going to be the big thing. Tomorrow, are we going to show that we can hold the bull market support band again at bare minimum? But could we also potentially show that we could get above the 200-week SMA again? If we did that, that would be great. And then the cherry on top would be if we reclaimed the 20-day SMA. So that's kind of what I'm looking at going into the weekly close tomorrow. And just to kind of point out RSI down here as well, you can see that we're underneath our long-term resistance line. And we are tapping on the 50 mark. And the 50 mark is kind of like that neutral line in the middle where typically price action underneath the 50 mark is more bearish, price action above the 50 mark is more bullish. So if we can close the week above the 50 mark, and those other levels that I mentioned before, with the moving averages, we could potentially, have some justification to potentially make a move up higher. But my hesitation would also be that the summer months for crypto are typically very flat, very low volume, not a lot of price action, a lot of like manipulation to the downside to try to like flush people out. So we'll see what the Bulls do in terms of strength, but I wouldn't necessarily be excited even if we did hold all those levels. It's just these little tiny indicators of like strength coming through, that can be nice to see in the long run. But I'm not saying that this is going to be like a run to like a new all-time high by the end of 2023 or anything like that. But just what we're kind of focusing on right here, right now. Any questions about that, Joe, before I move on?
No, it seems like it's just like we keep talking about. It's just it's hanging on, like it's beaten down and it's all messed up, but she just keeps on getting up, like it.
Hmm.
We made, it's nice that we made it back to the 20-week, and you said the 20-day as well, right? Or I
Yeah,
can't, yeah.
yeah,
So
we're
I
being
mean,
rejected at it right now, but yeah, we're right
yeah, I
there.
mean, if we get rejected again, okay, whatever. That's fine.
Yeah.
It'll bounce back down and it'll give everyone a chance to buy a little cheaper, and
Hmm.
then people will buy up and then it'll keep coming and then it'll go back up and then people will do what they're going to do. And just at this point, I think that we've talked about before. It's just this is the state of the market until potentially 2024. It's going to go up, it's going to go down, it's going to stay within these ranges, and it's going to be just what it is.
Hmm. Yeah, exactly. So just to continue with like some longer, like zoom out, like when in doubt, zoom out. Some longer term perspectives with Bitcoin right now. I just wanted to show this comparison chart again. This is one that I put out like every
Oof, that's a
couple of.
rough looking chart.
Yeah, right. This one I put out every couple of weeks just to kind of illustrate the fact that you need to have these longer time frames when kind of examining your assets.
Yep.
But this is Bitcoin in percentage terms compared against the Nasdaq, the S&P, and gold from July 2022, which was like that initial drop, summer capitulation that we thought might be the bottom of the bear market until the FTX collapse happened. And so
Mhm.
the FTX collapse is what's in this red box here that I say buy the dip, um, because that was the time. That was the time to make a buy. And, myself and, other people that uh, take uh, information from me and suggestions from me on when to buy, that's when we bought. We bought inside this box.
Yep.
And uh, so, yeah, so basically, if you bought inside this box, you'll see that your gains were better than the NASDAQ, better than the S&P 500, and better than gold. Um, because you were buying at a cheaper price and it got above it, and even when it came back down in March with all the scares with the bank closures and trying to blame crypto for it, and shutting down of the on ramps for institutional investors, that was
Mhm.
right about here. It came right back like in parity with the Nasdaq and the S&P, and then we shot back up and had that pump in March, April. Um, and so even today, with the pullback from that April top for this year, we're still have better gains than these other assets that we're comparing here. So
Yep.
I just like to show that so that people can kind of see that even though Bitcoin is volatile, moves up and down, and each week you're going to find a different story about what asset would be the best one to buy and all that stuff. If you zoom out far enough, you can see that Bitcoin is the best by far. So, any questions about that chart before I move on?
Nope. I like you went stupid heavy, and pretty much blew my load at that point, or phrase, but I mean, that was the point where I was going so heavy into Tesla and to crypto that it was insane.
Mm.
I was selling stuff to, like personal stuff to buy more. I'm just like, I need to buy more of this.
Yeah.
So, I no, I think that's your good points there.
Yeah, you got to buy when there's blood in the streets. So,
Yeah.
what I'm hoping is that, over the next 3 months, we kind of see the same pattern where what's happening right here, is maybe kind of similar to this. It comes back down to be like at that same level as some of these assets, and then it blasts off again. But
Yep.
again, this is the pre-halving year. I don't have like that much enthusiasm about it compared to the halving year, but it would be interesting to see if that was to occur. And then the last Bitcoin chart that I kind of wanted to highlight from a further back, zoomed out perspective, long term time frame perspective, is this one. And I also put this one out every couple of weeks or like once a month. I usually just say, like, looks right on schedule to me. In my tweet, because that's basically like kind of the gist of this here. This was the last cycle, and there's a lot of similarities in terms of like what the price action is doing and how it's moving. Obviously, in this cycle, we had a complete blow off top with and coming back down. What's different about the last cycle that we just had is we had this double top. So we didn't get as high of prices because of that double top, um, but there was like more consolidation. um, this When that happens, like, double tops also affect moving averages because you spend more time up high uh, than if you had a blow up top. So this also adjusted a lot of those moving averages up. So when I think about it that way, a lot of the time people say that the 200-week moving average is like the line in the sand for Bitcoin, but we lost the 200-week moving average this cycle, and we spent some time underneath it because of the FTX collapse and whatnot. It was still the best time to buy because we spend such little time in that area. But I think that we spent more time under that moving average than we typically would, because that moving average was elevated because we had a double top instead of a blow off top. So those are some of those interesting things to kind of keep in mind when we're looking at like the math behind the charts here. But What is this chart showing? This chart is showing that, like, very similar to 2019, once as we got above the bull market support band, that allowed us to kind of run up for a little bit. We got to the 0.382 Fibonacci level before we started coming back down and eventually fell back under the bull market support band. Here, we didn't get to the 0.382 Fibonacci level. And as I've been saying on my channel for a while, I believe that that could be the theoretical like top for this year if, Bitcoin was to hold the line here at the bull market support band and start to go back up again. I would think that somewhere in between 35,000 and 42,000 would be where we kind of find our top in 2023 as like a bullish, like more optimistic view. Um, but I also think it's totally feasible over the next 2 months that we don't hold the line right here at the bull market support band and we actually fall back under it, similar to what we did back here in 2019. Um, and the reason why I say that is because, again, the summer is a very poor time for crypto traditionally, and September is like always the worst month of the year for crypto. So if we like slowly bleed into September, then we have some sort of like flash drop in September to really flush out the last of the weak hands and then start moving up again in October, November, December for like a Santa Claus rally, for anticipation of like front running the halving year. I think that that's kind of like what we're going to see here. So I've basically told friends and family, like, any money that you want to allocate towards Bitcoin, try to get it in over the next like 3 months or so, like layer in over the next 3 months or so, and then it should be patient and let it do its thing as we're going into the halving year. Not financial advice,
Right.
but
Yeah. Yeah.
that's kind of, when somebody is, gun to my head, that's what I would say that I would do. So yeah, we're gonna see if Bitcoin's gonna hold the line here, or if we're not. But either way, I'm not too worried about it. Um, just a good time to stack.
Yep. I mean, it's always a good time to stack. So,
Hmm.
and because this is the times that it's really good too. They and I know everyone says it, but I know Rand from Crypto Banter, yeah, Crypto
Yeah,
Banter has been. There's so many damn shows these days, man.
yeah,
It's hard to keep track of everyone. He does a great show. I like watching the show a lot. But he's been pumping, not pumping, but he's been reminding everyone, hey, you don't become a millionaire in the bull market, you become one in the bear market. Like, this is a
yeah,
time when you accumulate all the assets, and this is the time where you are the one doing the work that no one else is doing. And when the next cycle comes in and people are oh, we're gonna do this, and we're gonna we've been here, we've done that, we've already stacked our bags at the lower prices. Everyone coming in is going to have to try and deal with it, almost to the point of it is actually the limited amount of Bitcoin
oh, we
now.
lost
I think
Joe.
it's down to what,
Oh,
like
there you are.
6% or something like that, someone said the other day.
Hmm.
You there again? Am I
Yeah,
back?
yeah, you're back.
Okay.
Yeah.
Where'd you lose me at?
What were you referencing in terms of that 6%?
Of only 6% of coins on the market right now are on the exchanges. Like,
Oh, okay.
I think
Yeah.
someone put that out there the other day. I think it was James. Down from like 12% or something like that. So this next bull run, there's going to be a lot less. Um, there's going to be a lot less Bitcoin to go around. A lot less. With the halvening and everything, it's dropping to what, I think, six. Is it down to like 6.5 now, or 6.25?
I'm not sure
Or is it dropping to
percentage. I'm
3?
not sure percentage wise, but I do know that the amount of Bitcoin on exchanges right now, it has not been at this level since 2018. So essentially, over the last 4 to 5 years, there hasn't been this low of coins. So we're definitely starting to see some of that supply shock narrative play out, and it's just going to get better as the rest of this decade goes on.
So yeah, we're dropping from into 2024 halvening. We're going reward will drop from 6.25 per block to 3.125.
Okay.
So I mean, we're getting to that point now, I think, where there's going to be people are really going to start looking and being like, oh, this isn't going in. This is not going to be, like more of. This is less of. So
Yeah. Yeah, and obviously the inflation rate of Bitcoin right now is pretty low. I think it's like 1.8%. I know it's under 2, but it's like it's pretty close to 2%. But after the halving in April of next year, uh, our inflation rate will, because of that cutting of the block reward in half that you just mentioned, Joe, we will be at a lower inflation rate than that of gold as well. So that's another feather in our cap to kind of go toe to toe with the gold as like Bitcoin is the new digital gold narrative.
yes.
All right. And then real quick, just to kind of show Ethereum as well.
Oh yes. Yep. Yep.
Because I
Good
know
one. So.
I know we've got that in our bags and we like that one as well.
Mhm.
Um, here's the Ethereum chart. It's you know what I like to tell people is like math is not perfect. Okay. So, like, we'll have deviations from time to time. It doesn't necessarily mean that like the thesis or like the original like thought process is totally invalidated. Um, so, why am I saying that? So, in March, with the bank scares and whatnot, Ethereum came down to test the bottom of the channel that I have drawn here, and the bull market support band, and the 200-day SMA. They were all in confluence. It tapped that and then it came back up. And so this right here that popped out on the top part of the channel, this is actually when the Chapella or Shanghai update happens. So this was all like the FOMO hype behind all the news. So it
Mhm.
was like, buy the news, or sorry, buy the rumor, sell the news. So you can,
Hard.
yeah, right. So we came out of the channel, but we spent, let's see, 1, 2, 3, 4, 5, 6, 7. Yeah. So within a week, we came back into the channel, and continued on here. And so right now, what we're seeing is last week we dropped out of the channel briefly, but what caught us? The 200-day SMA again. Okay,
Mhm.
so we held it. We dropped to it. We proved that we could hold it. We got back inside the Bollinger Bands, and then we got back inside the channel. So right now, it looks like the bull market support band is rejecting us, and obviously there could be like a downtrend happening right here. Oops, sorry, didn't mean to grab that. There could be a downtrend happening right here, so you do want to be aware of that. But if we can close the week back in the channel, that would be great. If we could get above the bull market support band, that would be even better. But we do have a lot of resistance here, and I'll bring up Bitcoin dominance. I'll bring it up for Ben. Maybe his ears are ringing right now. Um,
Shout
but
out to Ben. We would love to have you on, buddy.
Yeah. But here's the Bitcoin dominance chart, including stable coins. As you can see, we have put in new local highs over the past week, multiple, one local high, two local high, three local high, four, five. So 5 out of the last 6 or so days, we've put in a new local high for the Bitcoin dominance, and we're at like 50%. But the thing is that Ethereum still holds, if I go down here, about 20% of this. Now, we did have a pretty large or sizable drop from almost 21% down to a little under 20%. And I think that this wick is kind of telling you what you need to know, is that we're going to get rejected at the 50-day SMA here, come back down, kind of play around with the bull market support band and the 200-day SMA on this. And eventually, if we lose that, not only are we losing those moving averages, but we're losing the point of control on the volume indicator here for a decent time frame for the beginning of the year. Let's see how far back we can go before. Yeah, yeah. So that would probably be a fair assessment. So after the FTX collapse, you had a lot of volume down here, so that's what moved it down a little bit. But if we bring this back, yeah. So right about there. So if we were to drop to these levels and lose those levels, we'd be losing about 6 to 7 months. Maybe by the time we get there, it would be like closer to 8 months in terms of like where people were entering into the market. So I think that's where we could potentially see that capitulation. And what does that line up with? That lines up with the summer. That's July, August, September. These are the worst months. These are bad quarters for Ethereum traditionally. So if this really starts to tank and maybe start to come back down to the 17% area, or even drops down like to 14% or something like that, if we get that 5% put back into Bitcoin, and all that would get us to 55% here, which is that next level that I'm looking at. And that all those other altcoins are going to do worse than Ethereum. So that is the narrative that I think Ben is, really kind of talking about and looking for. Ethereum is usually the last one to move in alt season. It's the last one to fall. Why would it be any different for the dominance? We're seeing the alts bleed right now. Ethereum's probably going to be the last one to bleed, because when people are trying to make those decisions of like, I'm pulling out of my alts, what am I want to go in? If they're a little bit more risky, they'll put it into Ethereum. But if you're not risky, you put it into Bitcoin. But eventually it's going to get to the point where they've seen Ethereum come down so much as well that they're going to say, I don't even want to risk that. And then they're going to pull from Ethereum and put it back into the safe haven of Bitcoin. So I think that that's how over the next 6 months in this year, we go from this 50% right about here right now to the 55, and then maybe even potentially 60%. But we need to get some of that bleed from Ethereum in order to do that. So if we don't get as heavy of a bleed from Ethereum, I think we kind of stop at 55%. If we do get a heavy bleed from Ethereum, then we could get back up to like 60.
Now, do you think that there's actually going to be a chance that we do drop that low, considering that Gary has didn't it seems like he's almost hesitant to name Ethereum a security because he doesn't want that fight.
Mm,
So, and it seems like a lot of people are, treating ETH as more of a blue coin these days, or a blue chip these days.
yeah.
What do you think the chances are that this actually, that narrative plays out? And I'm not saying that it's not going to by any stretch. I think there is a decent chance it happens, but I think, like me personally, I think it's a 60-40, 60% it doesn't happen, to that extent. And then 40% that it does. I think that ETH will drop a little bit. I think the dominance may go up a little bit more, but I don't think that it's gonna, hit like previous high levels of the dominance.
Yeah, I mean, I don't think so like, just to here, let me change it over to a weekly view and like zoom out a little bit more. I don't think Bitcoin's going to be able to get back up to 73%, which would be like that next level if you kind of look at data going all the way back to 2017.
Mhm.
Um, so I think this was the ceiling for the last cycle. I don't think it's going to be the ceiling for this cycle. I'm thinking either 60 or 55% is going to be the ceiling for this cycle. And if you look here, the 200-week SMA is kind of like where it kind of capped out there. So if we were to cap out at the 200, or a little above the 200-week SMA for this cycle, it would put us at like 53 to 55. So that's why I'm leaning personally more towards like the 55 being the top level before the things start turning around in terms of dominance. But I
Mhm.
know that Ben is kind of shooting more for the 60 level. So uh Yeah, that's kind of how I see it. Um, as we know, saying, the words "this time is different" is some of the most dangerous things in investing.
Yes.
Um, but the question that you had, that's what comes to my mind. Is Has ETH been around long enough that and proven itself, and with the changes that they've made to the blockchain, is that enough where institutional investors and retail investors are also looking at ETH in a different way this cycle than last cycle? If that is true, then I think we won't see the dominance go as high. If history repeats itself, we'll see some sort of heavy capitulation from Ethereum, and that dominance will go from Ethereum into Bitcoin. So that's why I kind of have myself hedged like both ways. I'm
Hmm.
only buying Bitcoin over the past since January 2022, because I believe that the cycle is going in history is going to repeat itself. I believe that Bitcoin is the safest asset and everything else is going to bleed against it during these pre-halving years. But I also still have a large ETH position, that I'm just sitting on and letting it stay in long-term capital gains territory. And worst thing, is that I just have to wait until I, sell it at a level that I wanted to. But I know it's going to get back to the levels I want it to get to eventually. Um, but if it is different this time and ETH does hold more of its value, does hold more of its dominance, maybe it has a run of its own, or, it goes up faster than it typically does. Now I have a position that I'm already in, that's in long-term capital gains territory, that I can withdraw from, to get some liquidity to be able to do with other assets. So that's kind of how I see it. That's how I'm ready for either way. If it's the Bitcoin way, I just save my ETH position until later. I've got no rush in selling that. If Ethereum does something new, does something different, I can capitalize on that because I've positioned myself appropriately for that in the past.
Big brain moves, buddy. Big brain
Yeah,
moves.
man. Yeah,
Yep,
man.
that's I've been following more of the Rob approach, and I'm just buying, every week, and I buy what I buy, and when there's a bigger drop, I buy a little bit more. At this point, the only thing I'm happy with the levels that I've gotten to. I had some goals that I was able to match some and surpass some other ones, so it was like now I'm just focusing on just Bitcoin, like you. But I definitely think that ETH is going to be considered more of a blue chip this cycle, especially with all the big players like Starbucks and using or and Nike and all them using Polygon for their NFTs and stuff like that, which is
Mhm.
obviously a layer two for ETH. So I think there's a lot more institutional interest in it already. So I think prices may, drop back down to like that 15, 14, 50. If it drops down to 1300, I would be super excited, even, but I don't think that it's going to drop below 1,000 again, to be completely honest. And that's obviously just me, talking about what I think. And, I don't have any fancy charts like you, but that's just kind of how my gut is telling me it's going to play out. But
Yeah, no, I mean, and I would say that that's a valid thesis, because you just said, you don't think it's going to drop below 1,000.
yeah,
So, yeah, 1,000. Yeah, I could agree with that because you've got the 50-week SMA and the 200-week SMA underneath us to protect us, and then if you look at the time range, from basically from the Luna collapse to now, the the volume, the point of control on the volume profiler here says that 1,200 would be like a level that would have a lot of support as well. So yeah, I think you're
hey, I
right.
almost
Like,
sounded smart.
yeah, right. So like if you did lose the 1,500, then we would fill this gap over here, which would
Mhm.
be from about 1,500 to 1,300. And if that get as long as that gap got filled, um, then we might only like tap this or slightly go below it. But yeah, I think it would be hard to see it going below 1,000 because it didn't go below 1,000 last time either, and we've got a lot of volume that has transpired from there. So yeah, pretty good,
Well,
Joe.
well, folks, don't expect too much more out of me for the rest of the day or possibly for the rest of the year. I just sounded smart, probably the only time on this show. So I'm gonna go ahead and brush my shoulder off there a little bit.
Well,
Any
that's
other?
a good place to end, Joe. Let's end on a high note for you.
Right, definitely. So I actually did want to share just one thing real quick for everyone.
Yeah.
So just remember, there's a lot going on in the markets and everything. So I do want to pull up. This is the tweet from Binance. If you guys haven't read it, it's a pretty good read. Um, we want to provide an update on the current battle with Binance.us. Basically, what it's saying is they got the SEC's grant for request for TRO was denied. And Coinbase, or not sorry, Coinbase, but Binance is basically saying the SEC is fighting with regulation by enforcement tactics that don't belong in our justice system, and we continue to look or forward to look continuing to defend ourselves in court.
Mm.
Basically saying, "Come at me, bro."
Yeah.
So like shout out to Binance and CZ and Brian Armstrong and Coinbase for fighting the good fight for us and just basically telling Gensler, hey, you know what? At the end of the day, we're done with this. And one last thing I want to remind everyone and show everyone is, yeah, we've been having some, rough couple of weeks with crypto and everything. We're at the fear and greed index right now is at 47, but guys, we're already above $1 trillion.
Hmm.
Like at the end of the day, it's not that bad. Like, yeah, you look down and it's, oh my God, the 24-hour volume is down and the Bitcoin dominant. Well, I mean, that's going to go up and down regardless, but, that's not that much of it, 0.22%. But you guys remember there was a time not too long ago when we were like below $1 trillion by a decent chunk. And now we're up above it by, a not insubstantial amount of money. So
Hmm.
everything's going to be all right. Just got to zoom out and look at it. And then don't forget the next happening. It's coming up in April, guys, 2024. So
There we go.
when in doubt, zoom out and just remember that at the end of the day, you just trust yourselves and everything's going to be all right. So I got
Yeah.
nothing else unless you do, Bubba.
No, I'm good.
All right, guys. Well, thank you for joining another episode of Breaking the Cycle.
Yes,
We
thank you.
hope Beardy's meeting was very productive with Larry. I think he said they were going to go out and get some drinks and maybe go to a gentleman's club after. I'm not entirely sure. You never know with that guy. Beardy's wild, y'all.
Yeah.
So thank you again for joining us. And don't forget to go subscribe to Endless Grind on Twitter. Buddy, do you want to pull up your Twitter real quick before we go?
Yeah, sure. Let's see here.
Plug yourself shamelessly.
Yeah, right. I'll
Everyone
do a
knows.
little shameless shilling here.
Yeah, right. Everyone, he does do charts constantly, updating charts constantly. So if you want to see up to date with everything, there you go.
That's me.
There he is, folks. So make sure you give him a follow. We're working on getting him a YouTube channel up too, so that'll be coming here
Yeah,
sooner
yeah,
than later. And we
yeah.
will be moving the show around like everyone, like other ones. So that'll be fun. So you guys go outside, touch some grass, have a great weekend. Father's Day is this weekend, so if your father is still around, make sure you guys call him and tell him how much you love him, because there will come a time when you cannot do that, and trust me, it fucking sucks. So,
Mm.
um, pardon my French, but I'm gonna break my trying not to swear on the internet rule for that one.
I'll
So
allow
yeah, yeah.
it.
It comes from a heartfelt place, so I feel like it's okay.
Yeah.
You guys have a great one, and thanks for stopping by, and we'll appreciate it. We appreciate it.
Thanks, guys. Bye.